Hello, good morning, ladies and gentlemen. How are we all doing today? And hope we are getting ready for the New York session today. So let's quickly do what we do in the morning. So let's see if you can see my screen and you can hear my voice clearly. If you can do, kindly type in hi in the comment section so that I can know that we are all on the same page here. So I would like to see some feedback, please. If you can see my screen and you can hear my voice clearly, please do type in hi in the comment section. So let's see what we have here. And I would also like to know if the audio quality is good, because I've been trying to sort some clipping sounds in the last couple of minutes here. So I want to know if things are fine and good there. I would like some confirmation. Okay, so Susie MB, hi, how are you doing today? Good morning to you. Nest 57, good morning. 6069, all right. 100, all right. Okay, Carrie, good morning to you, Carrie. Glad to have you around. Valeric, how are you doing today? All right, so let's take this as a confirmation that we are good to go this morning. And it's on this note, I welcome you all to yet another promising session on the X-Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, and I'm going to be taking you on a trading journey as we take a technical dissection of the current market structure in anticipation of the New York session today. And it was quite a volatile trading 24 hours for us on most of the pairs that we have been monitoring as we anticipated the FOMC and the Federal Reserve announcement yesterday, which actually came in as expected. So we had an interest rate hike of 25 basis points, which was just as expected. But there is a little twist to the whole situation here, where there was an inclination that this might likely be the last rate hike probably in a long time. And this has actually sent a ripple of indecision across the market at this point, though the dollar has dropped quite a little to the downside. But we haven't seen some signs that we might likely see a further downtrend to the downside. So we are going to be looking at this today, and looking at the macroeconomic calendar today. We do not have any high impact event that we are going to be looking at that will be affecting any of the pairs that we are monitoring so far this week. So we are going to be skipping the economic aspect and then dive right into the business of today, using our technical skills to identify trading opportunity and as well manage our existing trade if we do have any. So with that being said here, let's dive right into the business for today. And as usual, the first commodity we are going to be taking this morning is going to be the US oil. And on the US oil, we have, hold on a second. Okay. So on the US oil, we have been selling the US oil since the beginning of the week. And in fact, this is one of our most profitable trade for the week as we continue to sell the US oil since price action broke down the $75.75 level. So let's run through how the week started for us on the US oil. So this was what we saw at the beginning of the week. We were able to identify a channel just right around the $76.20 level and the $75.75 area. Let's go a little bit further into the higher time frame, which would also give us a better view of what led into us selling the US oil for this week. So let's go into the 4 hours time frame for this case scenario. So at the beginning of the week here, we saw that price action was going through a descending channel. Price action consistently respected lower lows and lower highs, giving us this trend line that you see on your screen right now. And we saw how price action closed at this key level here, just exactly along the resistance line of that descending channel to give us a beautiful confluence to work with before the week began. And what we were looking out for at this juncture in the market just right at the beginning of the week were two possibilities here, that we could have a breakout of the $77 area, which will also made price break out of the resistance line of that descending channel to incite a bullish momentum to the upside. So that was one of the scenarios we were looking out for. And then the other possibilities we were taking into consideration was a situation where price will continue to the downside if selling pressure continues right below the $77 area. And one interesting thing that we noticed at the beginning of the week was the fact that we had a bearish gap which revealed the nature of the trading activity by key players in the market. And this was a sign that we could be going bearish. As you all know, we said here that as long as price remain below the $77 area, we shall be looking out for selling opportunity. And when we scale down into the 1 hour time frame to see how participants in the market has been reacting to that area just right below the $77 area, it was at this point that we identified this channel here between the $76.20 area and the $75.75 level. And you all know what we look out for whenever we do have this kind of simple setup. We want to see price action either break out of the resistance line or break down the support line for trading opportunities. And the latter was what happened here, as we saw price action broke down the support line at the $75.75 level, and in fact gave us multiple opportunities to be part of the sell position as price action came back to do a retest of that structure to further emphasize the level of presence of the sellers around the $75.75 area. And one thing happened after the retest of that structure. We saw price action went into a consolidation phase, which lasted about 24 hours in this market, which further emphasized the indecision in this market. And if you recall vividly, on Tuesday morning during our live session, we were able to spot this whole scenario, and we waited for either a breakout of the $75.75 level for buying opportunity, or the breakdown of the $75 area for selling opportunities. So with our sell stop order right below the $75 level here, we had our second sell position for the week triggered, and we were able to be part of a long bearish momentum as we continue to add more positions, had the breakdown of key structures like the $74 area, and then we also had one here yesterday, had the $71.50 level to continue to push price to the downside. And if you remember yesterday, we had this whole structure figured out during the live session yesterday. We identified this whole situation here, had the $69.30 level, where we said another breakdown of that structure will welcome more opportunities to add more position to our existing trade. And in fact, it was quite a very profitable week for us on the US oil, and congrats to everyone who has been part of this bearish move to the downside. At this point in time, so with this whole situation we have here, for some of us who will still have a sell position running in this market, I will be advising you to move your stop loss, secure this current position right now, and let's see what is going to be happening. So anywhere below the $70 level seems most appropriate to secure this current position, and the reason why that is, I will be sharing with you in a moment. So right now that we have secured all our sell positions, if you still have a sell position running, what is going to be our plans as we get prepared for the New York session today? And in order to be able to spot what to look out for, I would like to call our attention to the structure on the 4 hours time frame. And look at what we have here. So we can see that price action has been bearish for the last 3 weeks in this market. Price has been very, very bearish. And what we saw here on Tuesday made it a more stronger, as we saw the breakdown of the support line of that descending channel, which is a sign that sellers are still very present in this market. And with a breakdown of a key structure like the support line of the descending channel, there are still a chance that price action could still come back to do a retest of either the trend line or the $71.50 level before another wave of bearish momentum will happen. Or if it so happens that price action breaks out of the structure, then we might be looking for more opportunities to add more position. So now, how do we take advantage of this trade for today? Now, what I'm going to be doing here is this. Let us take into consideration the structure here at the $69.30 level, as this level here that you see on your screen right now is going to be our yardstick for trading activity for today. And why have I identified the $69.30 level as a yardstick for trading activity? Well, if we look into the past here and to go to as far back as the month of March, you will see how the $69.30 zone had been a major determinant of price action in this market. You saw what happened here in the month of March. We saw how this area was a selling niche at one point. We saw the breakout became a buying niche. Then we saw another breakdown again here. And right now we saw price action breaking down the structure one more time to give us a signal of how important that level is. Now, if I zoom right into this current structure right on the 4 hours time frame, this is what you will be seeing right now. And one thing you will notice about the structure is the fact that in the last 16 hours now, I think 12 hours now, you will see how price action had continued to oscillate just right around that area. Now, the question at this point is, will price action break out of the $69.30 level to incite a buying opportunity in this market to the upside, or is the sell pressure below the $69.30 level be maintained to incite another wave of bearish momentum to the downside? And at this point in time, and with this little information we have gathered here, you would agree with me that the structure we are in right now is a very critical point in this market where anything could actually happen. So in order to be able to be part of a potential move from this area, we need to scale down to a much more lower time frame where we begin to see things more clearly to identify a simple setup that we can actually use to be part of any move at either way. But there is one thing I would like to state here as regards this before we scale down into the lower time frame. I just want to quickly emphasize here that if price action at any point in time during the New York session breaks out of the $69.30 level, retest of that structure will confirm a potential move to the upside. And one thing I would like to state here is that as soon as price action gets into the trend line here, which happens to be the support line of the descending channel we identified earlier, we want to be moving our stop loss accordingly to secure the position and see how price action will be reacting to that structure, as there could be selling pressure below that level one more time to incite another wave to the downside. The same thing also is peculiar with this $71.50 level. If price action gets into that structure, we could be seeing selling pressure from that area. So if at any point price action breaks out of the $69.30 level, price action climbs to the upside, let's ensure that we are around to move our stop loss accordingly to lock in some profit while we wait out and see how price action will react to the trend line and the $71.50 level, which will determine if we are going to be adding more buy position or getting ready to sell. So now, with this being said here, I would like us to scale down into the 50 minutes time frame as we want to see what is really going on here, and let's see if we could identify a simple setup that we can use to guide our trading activity for today. So with that being said, let's dive right into the 15 minutes time frame. And on the 15 minutes time frame, this is what I was able to spot during the early hours of today. So I have a simple setup here that I think we can use to guide our trading activity. So I implore that you remain patient here and follow me through this whole process, as it is very simple to comprehend. So I will suggest that if you have any question along the line that you don't understand what I'm saying so far, just feel free to drop your inquiries in the comment section. So right here on the 15 minutes time frame which we are in right now, I was able to identify a simple setup here, which initially, if you look at this whole structure, it looks more like a reversal pattern in the form of an inverse head and shoulder pattern. Now look at this whole structure. Following the impulsive move that brought us to this point, we have this whole situation that looks like this like the head of the pattern. Then we have the right hand side of the pattern, and as you can see, price action had been caught within a consolidation phase just right within the $69.30 level and the $68.80 area. Now with a structure that looks more like a reversal pattern at this point, you all know that whenever we identify a potential reversal pattern, the next thing we want to be doing is to identify the neckline of that reversal pattern, which is going to be a platform upon which we are going to be looking out for buying opportunity, and at the same time the breakout of the neckline will confirm the validity of this reversal pattern. And coincidentally, the neckline of this potential reversal pattern is a potential one yet, because it is not yet a confirmed one, is the fact that it shares a confluence with that $69.30 level we identified on the higher time frame. So we have the neckline around this area. So for this whole reversal pattern to be mature, that is, buyers are coming in here, then we need to see a breakout of the $69.30 level, and if the structure is broken to the upside, we want to be in for a buying opportunity. Retest of structure will further confirm the strength of the buyers here, then we will be welcoming more opportunities in this market. So that is how we are going to be looking out for buying opportunity on the US oil. So we pay attention to the $69.30 level for buying opportunities in this market. Now, in as much as we are looking out for buying opportunities, you all know how we do it here. We also want to keep tapped with the potentials of the sellers too as well. So what happens if price action does not break out of the $69.30 level and price action continues to drop to the downside? Are we going to miss out on that opportunity? Of course, no. So what do we want to see on this chart that will make us feel comfortable that sellers have finally come in? That is, we want to be changing our bias from bullish to bearish. Now, at this point, what I did here was to acknowledge the fact that since the later part of the New York session yesterday, we have noticed how price action has been finding higher lows in this market. And when I went further to connect the series of higher lows in this market, giving me this trend line here, which I will call a temporary one at this point in time, as we are yet to see a breakout of the $69.30 level. So it's only when the breakout of the neckline happens that this trend line will be a confirmed bullish trend line. Now I also have another one here after I projected the previous one into the structure. So we have another trend line at this point. So with this whole setup that we have here, you know, whenever we have a trend line like this, as soon as the trend line is breached, it is a sign that the trend line may no longer be strong enough to hold on to that momentum. And what we are seeing so far in the last 1 to 2 hours in this market is the breakdown of this trend line here. Now, with this whole situation here, to capture a selling opportunity at this point, I was able to spot this situation here. You can see in the last 2 hours, this level has been a strong buying niche, as sellers have found it difficult to break down the structure. So if the breakdown of this level happens during the New York session today, then we are going to be in to sell. Now, a breakdown at any point in time, price is likely going to come back to do some retest of structure. So in that regard, we shall be having our stop loss somewhere right above the $69.30 level, which will be dovetailing to roughly 55 pips in that regard. So a breakdown of the $68.80 level will definitely welcome a sell position, which is likely going to incite a trend continuation to the downside. Now, a further breakdown of this trend line here again will also welcome more opportunities to add more position to our existing trade. So this is what we shall be looking forward to sell the US oil for today. So we have a simple setup we have here on the screen. So I'll advise that you screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So we have a simple structure just between the $69.30 level and the $68.80 level, which we shall be using to guide our trading activity for today. Breakout retest of the $69.30 level welcomes buy opportunity. Breakdown retest of the $68.80 level welcomes selling opportunities in this market. So let's be on standby to catch these moves when they finally happen. And if you do have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section. So with that being said, here I will be moving on to the next pair while I check the comment section from time to time to see if there are any questions for me. So moving on right now, we are going to be taking on the US Tech 100, which happens to be another profitable trade for us in the last 1 week, last 4 days in this market, as we have been selling the US Tech throughout the course of this week. Now let's go into what the week looked like for us, how did the week started, and how we took advantage of the trading opportunities we had in this market. Now look at what we had here at the beginning of the week. We saw our price action was initially trapped within a range between the 13,290 and the 13,220 area to further emphasize the indecision in this market. And we saw how price action was sitting on our key level at a 13,200 level during the first 2 days of the week. We saw price action above that area, and as a result of the multiple rejection of the 13,220, we identified this area as our demand zone for the week. And on Tuesday morning, we were anticipating that this structure here could serve as a platform that will lead into the breakout of this channel, where the breakout of this trend line will welcome a buy position for us, and then the further breakout of the resistance at the 13,290 will welcome more opportunities in this market. But unfortunately for the buyers, this never happened. Then we also simulated the potential breakdown of the temporary zone. As we said, a breakdown of the structure obviously would be an opportunity to sell, as price action would have taken out all the buy positions around this area to signal the strength of the sellers at this point in the market. And with this whole scenario here, we had our sell position triggered during the New York session on Tuesday to give us our first sell position for the week. And in fact, price action moved about, how many pips was that? It moved about 160 pips in our favor before we started witnessing this whole choppy situation that started during the later part of the New York session on Tuesday. And during our live session yesterday, we were able to spot this whole scenario, which I took my time to ensure that I play out all the possible scenarios that could likely happen in this market so that we can be part of any potential move. And the first thing we did here was to acknowledge the fact that price action has been within a range for 24 hours. That was yesterday. We acknowledged this whole structure. And we also emphasized that sellers are around the 13,135. And I told us all yesterday that the only way we are going to be selling this is if price action continue to find it difficult to break out of the supply zone. Then a breakdown of this support line at the 13,100 will welcome a sell position. And I also mentioned here that if price action breaks out of the 13,135, we could see a situation where price will do a sharp rejection of the structure at the 13,200, which happens to be the demand zone that was broken a couple of days ago, to incite a sell-off in this market. And if you look at this whole situation here, just right into the FOMC yesterday, we saw this situation happen. We saw a sharp rejection multiple times to give us an opportunity to be part of this move, and price action since then continue to ride to the downside. And in fact, we had a situation where price action moved over 200 pips in this direction before we begin to see the buy pressure resume during the early hours of today. And for those who are taking advantage of this opportunity, Well done to you for being on standby to have caught this move, and I do hope you have moved your stop loss accordingly to secure your position, and most of us would have been taken out of that position at profit. As we remember, we identified this area yesterday as an area to look out for our TP target, and at the same time, if we start seeing buy pressure around this area, we shall be looking out for buying opportunity. So once again, congrats to everyone who are taking advantage of this sell position on the US tech. Now, with this all information we have gathered here, let's move on to see how we are going to be planning ahead of the New York session today. So the first thing we are going to be doing right now, following the old volatile trading activity that happened yesterday, we want to scale up into the daily time frame so that we can have an holistic perspective of what is really going on in this market following the old situation we saw here following the Federal Reserve announcement yesterday. So in that regard, I will be scaling up into the daily time frame, and let's look at what is really going on this chart. So for the sake of this session, I will just zoom right into the structure. As we all know, the US tech has been bullish since the beginning of the year, and we had the significant breakout of the 12,800 to the upside by the buyers at the beginning of the month of April, which happened to be the first time price action would have broken out of that structure. Look at what has been happening here since the month of August last year. We saw how that level had been a very strong selling niche in this market before the breakout happened last month. And though we saw, after citing the breakout last month, we thought this could be a platform upon which another wave of bullish momentum will happen. But unfortunately for the buyers here, we saw that the bullish momentum wasn't strong enough to break out of the $13,220 area, hereby giving us a situation where price action is caught within a channel. And whenever price action is caught within a channel like this, it further emphasizes the indecision in this market. And with the whole situation we have here, it is very important that we remain very patient here. You know what we look out for whenever price action falls within a flat channel. We want to see price action either break out of the resistance line or break down the support line for trading opportunity, giving us a signal of where price action is likely going to be going in the nearest future. But so far so good. Throughout the course of the month of April, price action had continued to remain within this range, giving us a situation where patience is still required at this point. Now, at the beginning of this week, we noticed how price action came into the resistance line here, though we had a little breakout of that structure during the last week's trading session, and I told us all here at the beginning of the week that we need to be very, very careful, as the breakout we saw here last week Friday could still turn out to be a false breakout. And if price action drops below the resistance line one more time, selling pressure below that structure will definitely incite a move back into the support line of that channel, which, as you can see right now, is what has been going on in this market. So now at this point in time, the question to ask right now is this a retracement of this impulsive move that got us to this point, that is price retracing to incite the second wave of bullish momentum, or will this turn out to be the beginning of a sell-off in this market, where the breakdown of both the 12,800 and the support line of this ascending channel will incite a sell-off in this market? So these are things that we are going to be looking at today, and in that regard, we shall be scaling back down into the lower time frame to see how price action will be reacting to the structure here at a $13,000 mark, which happens to be a strong psychological level. So for the sake of clarity, I will be labeling this area. So we have the 13,000 level here, a very strong psychological area to watch out for. So we want to see how participants in this market will be reacting to the structure today to determine what our next line of action will be. So if price action breaks down the $13,000 mark, then we might be seeing this as an opportunity to join another wave of selling momentum to the downside, probably break down the support line. We don't know yet. So let's scale down into the 1 hour lower time frame. So I will first of all scale down into the 4 hours time frame to share with you what we actually saw at the beginning of the week based on this current structure. So I will zoom right in so that we can see things more clearly here and look at what we have on this chart. So we have the situation here since the month of March, price action been trapped within the range just right around the 13,200 and the 12,800, which we duly acknowledged on the daily time frame. And we saw the sell pressure resume here on Monday, leading into this bearish impulsive move that we have been witnessing so far since the beginning of the week. And remember what we did here at the beginning of, we said we are going to be using this impulsive move, thinking that this breakdown of the 13,200 was likely going to be a retracement to the downside in anticipation of another wave of bullish momentum. And to capture the end of the retracement, we projected using our Fibonacci retracement tool after running it through the previous impulse leg, and we aimed at the area between the 50 and the 678.6%, which we said will be a good spot for our TP target if we are in a sell position, which, as you can see right now, price action dropped into that structure. And in the last 48 hours in this market, we have been seeing multiple rejection of this zone, which lines up exactly with what our technical expectation is from this current market structure. Now, the question at this point is, will this turn out to be a demand zone for the later part of the week, as we have been seeing here in the last 48 hours in this market? And I want to also bring up this $13,000 mark, which we identified on the daily time frame here. So that let's bring it in so that we can acknowledge it also. So we have the $13,000 mark area here, a very strong psychological level, and we have seen our price action rejected that structure. So at this point in time, I'm of the opinion that we could be seeing a bullish momentum anytime soon. And with this whole situation here, anywhere above the 13,100 area seems most appropriate to look out for buying opportunity in this market. So I will be labeling this one as a breakout retest of this level, should welcome a buy opportunity in this market at this point. However, if price action continues in such a way that it breaks down this psychological level, that is the $13,000 mark, then we shall be looking out for selling pressure below the structure on our lower time frame to join the bearish move to the downside. So let's label this area too and place a sell instruction here. So we shall be selling the breakdown retest of the $13,000 mark. So you can see now that our center of focus for today is within the range between the 13,100 and the $13,000 mark area for trading opportunities. But personally, if we look at this from a technical standpoint and considering the fact that price action retested our golden zone at an area around the 61.8% of the previous impulse leg, there is a high chance that this could lead into the beginning of another wave of bullish momentum. So I'm hoping that price action, I'm tending towards a bullish bias on this one, but if the contrary happens and price action breaks down the $13,000 mark, we will have no other choice than to be part of that move. So let's scale down to the 1 hour time frame, where we shall be citing how we are going to be taking advantage of any potential trading opportunities at this point. So here we have the structures here marked out. So we have the 13,000 level, we have the 13,100, and following the impulsive move that brought us into this zone here, we have the first touch here of the 13,100. Price action came back into the 13,030 level, and as you can see, price is yet to break the previous low. And if this continues like this, then we might be having the evolution of a new higher low in this market, which is a sign that buyers are gradually gaining momentum in this market. And if that is going to be the case, then we are going to be having a potential reversal pattern in our books to be part of our guide for today. And you know what we do whenever we have a potential reversal pattern unfolding, we want to immediately identify a neckline which will be serving as our yardstick for trading activity. So a breakout of this neckline today will confirm this reversal pattern and give us a platform for a bullish momentum in this market. So let's have a buy stop order above the 13,100, and then we look out for more opportunities if we start seeing multiple rejection of that level to the upside. Now, as we buy the US Tech 100 for today above the 13,100, we need to also be very careful as we continue to monitor the trade. And the reason why I have said this is simple. Look at what has been happening here since the beginning of the week. You can see price action has been bearish, and if we connect the series of higher lows in this market, remember we have a bearish trend line which has been guiding this bearish momentum since the beginning of this week. So if I extend the bearish trend line further, we have a structure to look out for when price action gets into that area. So I would like to give a visual representation of what I expect. So a breakout of the structure happens, retest of structure by pressure above this level, giving us further confirmation of the strength of the buyers in this market. So as soon as price gets into the trend line, we want to ensure that all our stop loss on our positions are moved accordingly to lock in some profits, as we want to see how price action will be reacting to this area. So it depends on what happens here that will determine if we are going to be adding more buy position to our existing trade, or probably get ready for another wave of bearish momentum. So if price breaks out of the structure, then we shall be looking out for retest of structure to confirm a bullish momentum in this market, as a trend line at this point would have been broken to the upside, hereby giving us a sign that it could no longer resist the pressures from the buyers at this point. However, if selling pressure continues below the trend line, then this will be a sign that price action wants to respect the trend line one more time to incite a sell-off again. So that is why I have mentioned here that if price action breaks out of the 13,100 to the upside, let's be on standby to monitor this price action, and as price action moves in our favor, we move our stop loss accordingly to lock in our profits. So this is how we are going to be buying the US Tech 100 for today. Now, the other situation here is what happens if price action continues to the downside. We also want to catch any move if price continues as bearish in this market, and as a result of this, we have already identified a 13,100 level, which definitely will be our guide for today. So what this simply means here is this. Remember we already have the situation here. So we have a low here, that's 13,100. We have this area here, which is not, the low here is not yet broken to the downside, where we are saying that we are looking forward to a reversal pattern here. But if it so happens that price action breaks down the previous low at this point, then we might be in for a momentum shift. And luckily enough, we have the $13,000 mark area marked out there. So we look out for a retest of structure for confirmations. Then we are going to be in to join the trend continuation to the downside. So let's be on standby to catch this move if that is going to be the case for today. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your independent decision on your account. So that is that on the US Tech. If you have any questions, feel free to let me know in the comment section. So moving on now to the next instrument. So the next instrument we are going to be looking at today is the GBPUSD, which happens to be an interesting pair for this week, and I would like to share with you how we've been managing this trade since the beginning of the week before we go into the details of what to look out for today. So let me delete some of these illustrations here so that we can have a cleaner chart on this one. So here we are on the GBPUSD 1 hour time frame, and during the first half of the week we were actually selling the GBPUSD at one point, and this was following the identification of a choppy situation between the 1.25 700 and the 1.25420 area, which happened during the first couple of hours of the new week. And at this point in time, we were looking forward to a breakout or breakdown of this channel for an opportunity to trade this pair. And prior to our live session on Monday, I shared with you that I already took advantage of a sell position after price action broke down that support line at the 1.25420 area. And I told us all yet on that day that for those who missed out on that opportunity, because we were around here during the live session on Monday, I said let's hold on and wait for an option to be part of the trend continuation. So one of our simulation was that price could likely come back and retest that structure. If it does come back, then we should be having a sell stop order below the 1.25420 to join the move to the downside. And we also had structures around the 1.25 area, which happened to be our key level for the week, where we said a breakdown of that structure also will welcome more sell position in the market. And as you can see here, the first position went to as far as over 100 pips before the bullish momentum began, and the second position here went to as far as 67 pips before the bullish momentum happened. So during the first half of the week, we were quite profitable on this one, and you know what we do, we moved our stop loss accordingly, and we were taken out of the position with the appearance of buy pressure in this market. And during our live session yesterday, we acknowledged that price action appeared to be going through a gradual bullish momentum here, and we acknowledged that by drawing and connecting the series of higher lows in this market to give us the trend line, which will be our guide for this week. And I told us all yesterday that a breakout retest of the 1.2500 level, which is our key level, will be an opportunity to buy. But if price action breaks down the 1.25, then definitely we want to be selling the GBPUSD. And remember that the key level at the 1.25 was a major yardstick for trading activity. And one thing about key levels is that if price action is above that structure and we start seeing buy pressure, it is a good time to buy. And if price action drops below the key level and we start seeing selling pressure below the structure, it is a good time to sell. But so far so good. Since Tuesday here, we have been seeing price action continue to climb and find higher highs. Now things became a little bit more interesting during the FOMC yesterday, as we didn't see the effect that the dollar had on the other pairs on the GBPUSD like that. It wasn't really that effective following the FOMC. And one of the things that we noticed here since the FOMC yesterday was the fact that as soon as price got into the 1.25910 area, we begin to see some selling pressure resume from that area. So it is a sign that buyers are finding it difficult to break out of that structure. So we have a lot of sellers presence around that 1.25910 area, which needs some level of attention. But before we go into that detail, I will also want us to take an holistic view of what has been going on here since the beginning of the week. Now remember, the week started within this zone between the 1.25700 area and the 1.25420, and we can see here that in the last 12 hours price action is back within that zone, though it broke out that zone a little bit to the upside, and we had a new resistant line at the 1.25910 area. So despite the fact that price action broke above this zone that started this week, we can see that the buyers were unable to maintain that momentum above that structure, though we're still sitting right on the bullish trend line. Obviously this bullish trend line is going to be our guide for today. So now that we are going into the New York session today, and with the information we have gathered here, how do we intend to take advantage of a trading opportunity here? Now the first thing first we are going to be doing here, for those who are still in a buy position in this market, you want to be moving your stop loss right now to lock in this profit, as we don't want to lose out on this opportunity. So anywhere right below the 1.25 600 area seems most appropriate to lock in any profit at this point. So now the first thing I want to do here to help us guide our trading activity for today is to acknowledge the fact that in the last 3 days in this market, price action has been bullish, and when we connect the series of higher lows, we have this bullish trend line. So this trend line here is going to be our guide for today. So as long as price action remains above the bullish trend line, we feel comfortable in our buy position, and we look out for more opportunities to add more position to our existing trade. Now, talking about the expectation of buying the GBPUSD today, price action is above the bullish trend line, but at this point, it's not appropriate to be adding more position to our existing trade. And the reason why that is simply because of the sell pressure we have been witnessing around this area in the last 6, 7, 8 hours now in the market. We have been seeing selling pressure around that area. So we want to see price action take out all the sell positions along that zone to give us a confirmation that buyers have finally come back to take over this market. So with this expectation here, I'm going to be having a buy stop order above the 1.25910 area so that we can catch that move when it happens. So with a stop loss somewhere right below the trend line here, dovetailing to about 30 to 35 pips stop loss there. Let's see how far this bullish momentum is going to go. So for this one right here, we are not going to be buying unless price action breaks out of the 1.25910. There is still a possibility that after the breakout happens, price could still come back, do retest of the structure, or even go to as far as respecting the trend line one more time to inside the second wave, which would obviously give us more opportunity to add more position to our existing trade. So that is that on the buy expectations on the GBPUSD for today. Now, in as much as we are looking out for buying opportunity, we should also take into consideration the potentials of sellers too in this market. And if we look at the fundamental side of the market, where we had an interest rate hike for the US dollar yesterday, you know, when there is a rate hike, it favors the dollar in such a way that it increases the saving power. Majority wants to invest because of the high interest rate gives more profit. We might see a sell-off, of course, in this market. And if we consider the sell pressure around the 1.25910 here, says the later part of the New York session yesterday, there could be the chance that sellers could breach the bullish trend line. So at this point, what do we want to see on this chart that will make us feel confident to sell the GBPUSD? So please stay attentive, please. So we are going to see price action break down the trend line. Then at this point, price action breaking down the trend line is a sign that the trend line may no longer be strong enough to continue to hold on to the bullish momentum. And if that is going to be the case, we are going to be getting ready for a momentum shift. But remember, we are not getting too excited. We are not jumping right away, as we still need some confirmations to happen in this market before joining the bearish move. And this would reflect on the chart in the form of a retest of the trend line or the 1.25700 area. But the most important structure we want to be seeing is a reversal pattern, selling pressure right below on our lower time frame, seeing signs that buyers are finding it difficult to climb back above the trend line. Then we can get ready to be selling the GBPUSD, and with sell stop order below the 1.25420, we will be adding more position to the existing trade. And the sell position in this market that we have here, looking at the current market structure, there is a tendency of multiple entries in this market, as we have structures like the 1.25, 1.24840 and the 1.24500 area, where breakdown retest of the structure will be welcoming more selling opportunities in this market. So let's be on standby to catch this move when it finally happens. So we have a simple setup right here. Our center of focus for today is within the 1.25910 and the 1.25420, where we are looking forward to either a breakout of that structure or breakdown of the level for selling or buying opportunity. So you might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on the GBPUSD for today. So these are my views on the GBPUSD, and if you have any questions, feel free to let me know right in the comment section. I'm already running out of time, so I will have to run through the last two pairs that we are going to be taking for today. So the next pair we are going to be looking at here is the XAUUSD, and it was quite an interesting situation for us on the XAUUSD yesterday, as we had this old buy position as price action finally hit a new high at the $2,080 mark. Now let's quickly run through how the week started for us and how we have been managing this trade in the last couple of days. So I would like to delete all these illustrations here so that we can have a clear chart at this point. So here we go. I delete this, I delete that. All right. So on Tuesday here on the XAUUSD, we were able to identify the simple setup here on Tuesday. That was a couple of days ago, where we observed our price action was trapped within this range around the $2,019.50 level and the $2,012 area. And obviously, you know what we look out for whenever price action is trapped within this kind of situation. We are going to be looking forward to either a breakout or breakdown of that channel for trading opportunities. And during our live session yesterday, I told us all that we are going to be having a buy stop order above the $2,019.50 level to capture that move, though we were stopped out at some particular point in time. But if you had maintained these expectations because of the breakout of the $2,019.50 level, you would have been part of this position. As personally, I think I closed the trade around the $2,040 area, giving about 200 pips thereabout on this one, and I'm very sure majority of us will have maximized the profit on this one to capture this old bullish momentum to the upside. So for those who took advantage of these opportunities, well done to you guys for being on standby to catch those moves. Now that we are going into the New York session today, I was able to identify a simple setup after doing a detailed observation of trading activities in the last 24 hours. So I have a new chart here where I was able to spot a new setup that we can use to guide our trading activity for today. And this was spotted on the, I think, 30 minutes time frame, where I identified the simple setup here. So I have the, first of all, I acknowledge the fact that price action has been bullish since the beginning of this week, and as a result of this, we have this bullish trend line figured out after connecting the series of higher lows. Now with the bullish trend line figured out here, I added a couple of structures to this whole situation here. As you can see, in the last 12 hours in this market, price action has been within the $2,080.50 level, which happens to be the new high in this market, and we have the $2,030 mark, which was broken during the later part of the New York session yesterday. And with a breakout of the $2,030 level and continued buy pressure around the structure, I have this structure identified here. So look at what happened here. We saw the breakout of structure, price action retraced back into the structure, and since then we have been witnessing buy pressure around this area to give us a signal that this area could turn out to be another platform for another wave of bullish momentum in this market. So as a result of this, what I did here was to, and for the fact that price action is sitting right along the bullish trend line which we identified earlier, it is quite reasonable to start looking out for buying opportunity above the trend line. So what I did here was to have a buy stop order above $2,036.50 level to join this bullish momentum, and currently I'm running in profit of about 40 pips thereabout, and let's see how far this is going to go. And for those who had missed out on this opportunity, well, let's have a buy stop order above the $2,045 area to be part of another wave of bullish momentum. So going forward, the bullish trend line here is going to be our guide for trading activity. So as long as price action remains above the bullish trend line, we continue to look out for more buying opportunities in this market. And we have the $2,045 area where the breakout retest of that structure will welcome more position to our existing trade. Now, you know what we do here, even though we are looking out for buying opportunities, we also want to take into consideration the potentials of the sellers as well. So since the bullish trend line here is serving as our yardstick for trading activity today, a breakdown of the bullish trend line should send us a red flag that we might likely be seeing a bearish momentum anytime soon. But I wouldn't be joining right away, as I will still need some further confirmation to give me that leverage that sellers are gradually gaining momentum. So even if a breakdown of the trend line happens, we want to see price do a retest of structure and continued selling pressure probably below the $2,045 area. We just want to see signs that buyers are finding it difficult to climb highs. This observation should be done on a lower time frame, like your 5, 10 or 15 minutes time frame. Look out for selling pressures, then we can join that decline to the downside. And with a sell stop order below the $2,030 level, after this old reversal pattern happens, we want to be adding more position to our existing trade. So that is how we are going to be trading this today. So we have a simple structure here within the $2,045 mark and the $2,030 area. It's a $15 range, looking out for trading opportunities within this area. So let's see how this plays out in the next 24 hours, and we shall be here tomorrow to review how well this pair has been doing. So with that being said here, if you have questions, let me know in the comment section. So the last pair we are going to be trading for today is the USDJPY, and in fact the USDJPY is another profitable trade for us for this week. Hold on a second, is it this? No, okay. All right, let me just do this quickly. So remember, at the beginning of the week, let me scale up into the 4 hours time frame here so that we can see things more clearly. Now look at the 4 hours time frame here. We acknowledge that price action has been bullish, and we saw the breakout of this key level at the 135.00 area. Let me bolden that a little bit. And then at the beginning of the week, though we had some buy positions here, which gave us about, let me see how many pips that was. We bought above the 137, which gave us about a 60-70 pips before the bearish momentum began. And right on Tuesday during our live session, we acknowledged the bullish momentum here, and then we had this bullish trend line figured out to guide our trading activities on Tuesday. And one thing we said is that if price action remains above the bullish trend line, we look out for more opportunities. But if price action breaks down the bullish trend line, then definitely we might be in for a sell-off in this market, which might likely be a retracement of this impulsive move that we had there. And to project where the retracement phase could end, what we simply did here was to use our Fibonacci retracement tool. We ran it through the previous impulse leg, and we aimed at that area between the 50 and the 78.6% for our TP target. And as you can see here, since we started selling below this trend line, we saw price move a maximum of 350 pips in our direction. And remember, we had multiple entries on this one as we continue to add more positions on our lower time frame. So right now, most of us will have been out of the sell position at this point in time. So I will be deleting that one right now, as that is no longer needed. And one thing we have observed here in the last 16-18 hours now, we can see how price action just right within that zone that we identified as our golden zone area, we have been seeing some choppy situation happen around that area. And what this simply tells us is that there is a level of indecision in this market, which further emphasizes the fact that we are within a critical structure. Now look at why this area is very critical at this point. Remember, we have this bullish trend line since for the last couple of weeks now, and look at where price action is right now, just right along that bullish trend line. So at this point in time, anything could actually happen. Now the question around this area is, will price action respect this bullish trend line one more time to incite a trend continuation to the upside, or is it going to be a situation where price will break down the trend line to incite more sell-offs in this market? So as a result of this, I've been able to identify a simple structure that we are going to be using to guide our trading activity for today. And one of the structure is the 134.220, which happens to be the lowest point price action has been for this week, as you can see here. So when I scale down to a much more lower time frame, you begin to see things more clearly. So right on the 15 minutes time frame, is it a 15 or 30 minutes time frame? Okay, let's use a 30 minutes time frame. I was able to identify a simple setup that we are going to be using to guide our trading activity for today. So we have the 135.00 level here marked out. Then this is the lowest point I showed you on the daily time frame at the 134.220, which happens to be the lowest point price action has been for this week. So let's first of all talk about the potentials of buyers in this market. So I have a channel already, and look at what happened here. We haven't seen a situation where price has been caught within a consolidation phase, but it is characterized by a lot of buying pressure. And we can see we had an engulfing candle within the structure, which is a sign that buyers are gradually gaining some presence along that area. So to guide my trading activity for today, I'm looking forward to a breakout of the 134.770 area. And look at this whole structure here. Since in the last 48 hours, you will see price action has been bearish. I have a trend line to that effect. So if price action breaks out of the 134.770, we would have had a breakout of that trend line. And the breakout of that trend line means that the trend line is no longer strong enough to reject buying pressure. So at this point, I have a buy stop order above the 134.770 with a stop loss sitting somewhere right around this area, around 335 pips stop loss. There it is. Then I have another buy stop order above the 135.00 area, where a breakout of that structure will definitely bring more opportunity to add more position to our existing trade. So that is how we are going to be buying the USDJPY. So we are looking for structures and patterns above the 134.770 and the 135.00 area for buying opportunities for today. So let's be on standby to catch that move. So anywhere above that structure, we continue to look out for buying opportunities in this market. However, if price action instead goes the other way and continue to go to the downside, then we might likely be in for a trend continuation to the downside. And remember that we have a trend line which I already figured out here that captures the lower highs in the last 48 hours in this market. So if price action drops back below the bearish trend line, then at this point we are going to be looking out for selling opportunity, as we are back within the seller's territory in this market. So to capture this bearish momentum at this point, we are going to be looking forward to selling opportunities right below the 134.220, which obviously would have been below the bearish trend line. So with a sell stop order below that structure, we shall be looking out to sell the USDJPY below this area. So what this simply means that as long as price action remains below the 134.220 and the bearish trend line we identify here, we shall be looking out for selling opportunities in this market. So let's be on standby to catch this move. And for easier access, you might want to screenshot my screen right now so that you can use it as a reference point when you're about to make your individual decision. So our center of focus here is a simple setup here between the 135 and the 134.220, which we shall be monitoring in the New York session for today. So whatever happens around this area is going to be determining where price action is going to be going for today. So let's see how things plays out, and it's on this note I call it a day here. It has been a wonderful moment with you guys. I hope you are able to use the information here to make your individual decision. And for the newcomers in the house, I hope you are able to gain one or two things during the live session. But trust me, the more time you spend with us, the better you become, and the easier you begin to use the information you have gathered here to make your individual decision on your own account. So it's on this note I want to call it a day. It has been a wonderful moment, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the instruments that we have been monitoring has been doing in the last 24 hours, and at the same time get ready for the last trading day of the week. Do have a wonderful evening, everyone. Bye bye.